Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week get everything you need to know in 90 seconds at 9 o'clock with news the instability feared over the new US tariff approach is hitting their economy. First up today, we need to note that US headline CPI inflation rose in January to 3% when no change from December's 2.9% was anticipated. Core inflation, though, was expected to fall to 3.1% from December's 3.2%, but in fact it rose to 3.3%. Rents were a key factor. This has set financial markets on edge. Although not as aggressive, this official data confirms the University of Michigan's Consumer Sentiment Survey that reported a sharp jump in consumer inflation expectations. All this unwelcome data had a big effect on benchmark interest rates, with the US Treasury 10-year yield jumping 9 basis points. Clearly the Fed is right to wait before cutting its policy rate. Markets aren't pricing in any rate cut now until December. Wall Street equities turned negative after this news too, and the US dollar firmed on risk aversion. Across the Pacific, Japanese machine tool orders came in at an average level in January, but up 4.7% from the same month a year ago, but nothing like the spurt they had in December. And India's industrial production is leaking growth, and at a faster rate than expected. It was up 4.3% in December, down from the 5% growth in November, and well below what was anticipated. You can see why their recent union budget moved into stimulus mode, and the central bank cut its policy rate. India needs a boost to keep its expansion going. Meanwhile, India's CPI inflation rate is easing, down to 4.3% in January from 5.2% in December. Food inflation fell sharply, but that's still running at 6%. The US Treasury 10-year yield is now at 4.63% and up 9 basis points from yesterday at this time. And the price of gold will start today at just under $2,894 an ounce, down $10 from yesterday. And oil prices are down nearly $1 at just on $73 a barrel in the US, while the international Brent price is now just under $76 a barrel. And the Kiwi dollar is now at 56.3 US cents, down 30 basis points from this time yesterday. Against the Aussie, we're down 10 basis points at 89.8 Australian cents. Against the euro, we're down 40 basis points at just on 54.3 euro cents. That all means, though, that our trade-weighted index starts today at just on 66.7, only down 10 basis points from yesterday because we have risen sharply against the yen. You get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.